Let's start with your business, if we could, sir. You had a fair amount of outflows, something like $40 billion last year, but you seem to have come back some this year. Where are you from your point of view?
Yeah, it's definitely getting better. I mean, we are seeing sort of quite big industry trends, the active equities to passive equities, fee pressure, and then public markets to private markets. So the long-only business is pretty tough at the moment.
So Martin, where are you in the active passive? How are you moving into passive to try to compete? Because as you say, that has been really the pressure, passive with very low fees.
Yeah, I think, and you're quite right, passive is going to zero. I mean, we're already seeing some passive funds at no fee, 0% fee. So I'm not convinced it's an area we should try and compete with the big guys in that area. So I think the more interesting strategic move businesses like us are doing is moving more from public market equities to private market equities, because the big asset owners who we manage money for are making that move, and the prediction is that 15% of the world's assets will move. 15% are already in private markets, and that's going to move to 20%. So quite a big shift towards private markets.
So in that shift, what do you do? What do you buy? How do you expand? How does your business change?
Well, I think you've got to be bigger in real estate. We've already got about $100 billion in private markets, so we're already got scale there. It's just getting known for it, so that if a big asset owner decides to do a shift from public markets, where we've traditionally been pretty strong, to private, they also think of us alongside the sort of more traditional private market managers. And if you look at the statistics, being in private markets, the fee level is significantly higher than public markets, and obviously significantly higher than passive.
Martin, are you big enough, period? I mean, you really built Aberdeen through acquisition, and we see time and time again in the asset management area, mergers, consolidation. Do you need to get bigger?
I think we're probably out of that middle ground that I've always thought is not a great place to be, but we're not in the big league, and certainly not big in the U.S. Half the world's assets are in the U.S., so we'd love to be bigger there, either through organic growth or some sort of strategic move. But at the moment, we're sort of really concentrating on making sure that this merger between Standard Life and Aberdeen gets bedded in, and there's still a lot of work to be done to do that.
How competitive would it be to get into the U.S. market? Like if you look at, say, Asia, where lots of asset managers are going now, versus, say, U.S. Talk about how hard it is to get into either one, et cetera.
We're already in the U.S. We've been there for 25 years.
Right, but if you want to scale up, but if you really want to scale up, Martin, for both.
Yeah, you need to improve distribution and spend much more money on distribution. And in the U.S., I'm not convinced it's a great idea to come in and compete in U.S. large cap, but try and get a better position in emerging markets, in global equities, Asian equities, the areas that we've traditionally been strong in.
So, as you say, you've been traditionally strong in emerging markets. Where are you right now in emerging markets? Given what's going on with the trade situation, particularly around the world, a lot of people are getting nervous about emerging markets. Does that create an opportunity, and where are those opportunities?
Well, we've been a long-term bull of India, and I was listening to what you were saying earlier on India, and I fully agree India is the big opportunity, and our the largest positions we are in India. But China's, we've been pretty cautious on China for a long time, but getting more positive on the China A-share market, just because the depth of that market is similar in size to the US in terms of number of companies, and also quality there. So because it's such a large opportunity, it allows you to find quality companies to invest in. But India is really where I would say we've felt more comfortable for the longest, but it's not a cheap market.
Martin, what do you feel like you really need to avoid in emerging markets now?
Well, it's the first question we ask is, can we trust the management of this company to look after us as a minority shareholder? And that's always the big danger in emerging markets, because often you're investing alongside families or founders or businesses that are almost sit almost between private to public markets. So that's a big danger. I would say the quality is always the biggest danger. But apart from that, it's again just doing your basic research into the companies and really trying to find good companies and trying to avoid the politics, or else you can get tied up with thinking too much about the politics of a country rather than the companies in that country.
Martin, you started out talking about private markets versus public markets in general. How does that apply, for example, in India or emerging markets? Because you have a liquidity issue there, potentially, when you go into private. Do you stay away from private when you get to an India or a China?
Yeah, definitely. At the moment we do, because the market's not as mature. And in any case, as I said, a lot of the companies in China and India, the small cap companies, have more of the characteristics of a private company than a public company. Often liquidity is pretty tough. So really, there's so much opportunity in small caps and China A share. There's probably no need for a long-only fund manager like us to move into private markets yet in those countries. But that is going to come, and that will be the next step we companies like us take.
Martin, quickly, China-U.S. trade war. What's your base case? How do you view it today?
Well, I think the issue is probably the American economy is showing so much resilience and strength that it's put the U.S. probably in a better negotiating position than they thought. So I'm not convinced we're going to get a swift resolution to it at the moment.